So one of the things that as business owners begin building a business, they start to ask themselves is, what do I do with profits? Like, what are we supposed to do with profits? And what do we want to do with profits? And to help people kind of understand basically how to go about this, there's books you can read with that have very prescribed ways of saying, here's how much money you should put here and all that kind of stuff. And I'm not opposed to any of those necessarily, but there's basically 4 categories I recommend folks consider when they're figuring out what to do with profits. And the first one is your personal tax liability. So one of the things that people learn usually about year 2 in business ownership is there's no such thing as a business paying taxes. These are personal income taxes that we incur, and it's our individual tax liability is paid, not the company's. So the first thing we had to figure out with distributions or profits, whatever vernacular you like to use, is there enough there to pay my tax liability? And if there isn't, that's the problem we got to start with. So one of the things I've seen business owners do that really creates problems, and by the way, the IRS is one of those entities out there you just can't mess with. Like, they don't care about your family, they don't care about anything, they just want the money. So we got to kind of operate under that as one of the defining sets of rules we have to work within. So not treating our tax liability like a bill is something I strongly recommend. So what I mean by that is, what some folks will do is they'll kick the can down the road and they'll say, okay, I know I'm going to have to pay a big tax bill, but I'm going to get that in a few months. And what I suggest is operate under the reality, which is this is not your money from the moment you collect it. The government lets you keep it for a while, but it's not your money. It's their money from the moment you've earned this income, you owe this tax, and it's their money from that moment forward. So keep that money in a separate account that you don't commingle with your funds, so that you're not treating it like a bill, and then the bill comes due and you don't have the money, now you're in trouble. So whether it's setting aside weekly, monthly, daily, whatever works for you, oftentimes people do it weekly or monthly, setting aside the money you're going to owe to the IRS, keeping that in a separate account, separate from your money, so you don't look at your financials and go, oh, I have all this money, that's not really your money. That's the first thing. So the first category is tax liability. So we're talking about distributions. The first thing we have to consider is, how much is it going to cost to pay my taxes? Then the other 3 are growth, rainy day fund, and personal compensation. So what I mean by growth is, let's say we have a 14 truck operation. We're a carpet cleaning company. We have 14 trucks, and one day we want to have 25 trucks. Okay, well, how much is it going to cost us every year, every quarter, to fund that growth by the time frame we've established? And then so we need to say, okay, of the profits we have, let's put X percentage of that aside, or X dollars of that aside per month, per quarter, per year, however you want to do it, towards that goal of funding the growth. And the next one is the rainy day fund. How much do we need to have on hand in case things go really bad? Is that 3 months of revenue? Is it 5 months of expenses? And the methodology you choose will likely work as long as you have a methodology and you're saying, I'm going to put X percentage or X dollars aside just in case to establish this rainy day fund to rely upon if things go south. And the fourth one is owner compensation. So what's the point of doing all this and having all this stress and frustration if you're not going to be compensated for it? Some folks want a lot of compensation, some other folks don't. Some folks would rather fund the growth more. Some folks would rather have more safety and security, and they want less pay. All those things are fine. I don't have a hard and fast rule on following on X percent should go to this, X percent or X dollars should go to that, except for your tax liability. You have to pay that. You don't have a choice. And as long as we have a plan for how we're addressing each of these 4, and by the way, we could say for the next 2 years, we're putting 0 towards our rainy day fund because we've hit our goal and there's no point in putting any more there. That's a perfectly acceptable answer. All I emphasize to folks is, let's address those 4 categories and come up with how you want to address those things and how much money you want to allocate to each one of those, whether it's dollars or percentages, and operate under that plan. So as you take distributions, the money is going to address those 4 needs.